Hi, my name is Chris Rowe. I've been analyzing and trading stock and options for about 13 years and worked on Wall Street managing money for about 9 of those years for institutions and for individual investors. Welcome to the Tycoon Report Market Wrap-Up. We decided to put these videos together because of the recent market turbulence we've been experiencing. So hopefully within less than 5 minutes, I'm going to show you today's market summary, and I'm going to show you that there's always a bull market somewhere. And if you watch it for about 5 minutes or less, then you can go back to enjoying your life. Let's see what happened in the market today. Well, the market posted solid gains today, and there was notable strength in financials and retailers. You could see on your screen here that it's notable gains. Nasdaq was up over 1%. Everything else was up about 0.5%. And while that's respectable, it's not a very big deal. The market was up a lot more. I'll get into that in just a second. But as you can see, the financial sector ended the day with about 1.7%. You can see consumer discretionary was up about 3%. After retreating from the high, the financial sector, the financial sector was up about 3.8%, and then it retreated from its high. The stock market basically traded the opposite of what crude oil prices did. Well, you can see this is today's market, and you can see this is a 5-day summary. I just want to show you that consumer discretionary has been gaining strength. Here we're looking at the New York Stock Exchange, and before I go on, I just want to note that we're in a long-term downtrend. You can see a very easy way to tell is the 20-week moving average crossed from above to below the 40-week moving average, and we are in a long-term downtrend, and we are showing an intermediate advance and a long-term decline. Okay, we're going to look at the intraday action for the S&P 500. The part highlighted in green is today's action. This is a 5-day intraday chart. And you can see what I'm talking about now, about how volatile it was and everything. We're going to zoom in. This is the entire day's trading. And like I said, the market traded the opposite of what crude oil prices did. And it's probably because there wasn't much corporate or economic news to trade on. Crude oil prices were up about 1.1% to 116.5 per barrel. That was on fears that the conflict between Russia and Georgia were going to disrupt the oil supply. But then crude prices ended with a loss of 0.5% at 114.5, or 114.62 to be exact. So you can see the volatility in the S&P here as the stock market gave up half of its gains in the afternoon trading as crude prices recovered some of their earlier losses. And then the Fed said that the lending standards have tightened. I just want to show you very quickly before I get into the Fed that the U.S. dollar started to rally recently. You can see here just in the last couple of weeks it's really taken off. This is the U.S. dollar index, and it looks like it could possibly be. Some people are talking about this as a possible reversal in a long-term downtrend. I'm not ready to call that yet, but you can see the spike in the U.S. dollar, and that has helped. The fact that the Fed decided to stop lowering rates after numerous interest rate cuts caused the dollar to rally. That's really leaned on commodity prices, and I've told you many times, over the last couple months that you should be lightening up on your commodities exposure. We won't go over that again, but basically, the Fed said over the last 3 months, domestic financial institutions reported that they've tightened their lending on all major loan categories. And specifically, they said that 75% of domestic respondents tightened requirements for lending standards on prime mortgages, which is up from the previous survey's reading of about 60%. Finally, there's always a bull market somewhere. What we're looking at here is BHH, and what this is it's the Merrill Lynch B2B. It's an ETF that tracks the B2B, that's business to business. It's called the Internet Holders, and what it does is it seeks to diversify your investment into the B2B segment of the Internet industry through a single exchange-listed instrument, and represents your undivided beneficial ownership of the underlying securities. What that means is you have exposure to the B2B sector, and you can see that this has actually rallied about 100% since April. And it looks like it's not going to stop for a little while, so that's something you might consider on a pullback. Anyway, that's it. I hope that you enjoy your life, and I hope that you come back next week to take a quick 5-minute sneak peek at what's been going on with the stock market. Take it easy.